Welcome to the Melinda Eitzen Show. I'm Melinda. We are fortunate today to have Brian Trampe with us, and he is a forensic accountant, which means he's getting into all the detailed stuff that people don't want him to see. Brian, welcome.
Thank you. Thank you. Thank you for having me.
I'm so glad you're here. So tell us, what does it mean to be a forensic accountant?
Well, in my particular field, I primarily work on family law matters. So I always tell people the four reasons someone might need me in a divorce would be, say, I do business valuations as well. So if one of the spouses owns their own business and they need to get it valued and they can't agree on a value, that would be one. Number two would be tracing separate property or community property, and maybe we'll get into the differences between those later. The third is the forensic side, which would be, surprisingly enough, people will try to hide money from their spouses, especially if they've been potentially planning the divorce for a while. That's the forensic, kind of following money, money coming in, money going out. And then the fourth would be just general marital estate advice. Like, there's a lot of spouses out there that say they didn't have any knowledge of the finances. Either one spouse handled it all and the other one didn't know much about it. Well, they could bring me in and say, hey, I have no idea what we own and what we owe. Can you help build what we call an asset and liability schedule or property spreadsheet of, trying to figure out what they own.
Oh, that's great. Okay, so as you know, I'm a divorce lawyer, so I've worked with Brian, and you do a great job.
Thank you.
Let's start with the hiding the money.
Yes.
People are really worried about that. I mean, a huge amount of the people that call me say, I know they're hiding money.
Yes.
And I always tell them most people can't do it effectively.
Yeah.
Because unless they're paid in cash and they stick it in the floor, there's going to be a path for you to follow.
Correct. And, so generally I always tell people, okay, most people have certain tendencies. Like, I deposit a paycheck into a certain bank account, and my wife, and then we will pay expenses out of there. And most people have normal expenses, mortgage expense, insurance, utilities, kids expenses. So I'll start there of like, okay, let's see the money, where all the money is going in. And then you'll start seeing, especially people that say have been planning for it, you'll all of a sudden start seeing, not all the time, but transfers out.
So their pattern change.
Yeah, exactly. You look for the last 2 or 3 years, and you're like, you just kind of skim through it. You're like, okay, look, you see all these expenses, and then all of a sudden, oh, here's a withdrawal of $5,000, or a transfer to J.P. Morgan. Then we'll say, oh, well, there isn't a J.P. Morgan. We don't have any J.P. Morgan account statements. So then we'll have to ask you if
what's a J.P. Morgan?
Yeah. So then that's probably the easiest way. Another way people, I would say, can hide money would be in businesses, especially if you own 100% of multiple businesses. You just leave the money in the business, or there's so much activity going on in the business, you might here and there take a withdrawal from the business or transfer it out from the business. And those are some of the most common ways. And you brought up cash. Like, cash is hard to follow, other than identifying, hey, here is a schedule of cash withdrawals for the last 2 years, and they add up to $150,000. That
you can see it coming out at least.
Yeah. So then you would give that to your attorney, and however we present it, if it goes to mediation or at court, it would essentially be like a waste claim or constructive fraud on the community of like, hey, here's $150,000 that came out in 2 years. What did you do with this?
Right.
And then based on what kind of responses you get from the other side, you could
make decisions,
Yes,
make claims
yes.
from there.
Yes.
They can, in their own mind, say, I know that money's still someplace.
Yes.
If somebody's paid in cash, which is unusual, it's
Yes.
mainly in the tipping industry, right?
Correct.
Where they're paid in cash. Then that's worse because we don't even see it coming out someplace. But we could look at lifestyle, right?
That is, yes, yes. That's what I was taught when I first started doing this was that's what the IRS would do is, okay, say someone lives in a $2 million house and drives a Ferrari, but they're only reporting $20,000 of income on their tax return.
Something does not add up in this equation.
Yeah. So, but you're right. Like I tell clients this all the time. Like it's very hard. They'll say, "Oh, this business, say construction or something like that. Oh, my husband or wife gets paid cash for these services and doesn't report it." And I say, "Well, I mean, we need to find something that we can point to to convince. Hopefully, it's not going to go to trial, but convince a mediator or someone that." Look, there's missing money. Now, do we know exactly to what extent? Maybe not. Or do they have a safety deposit box? Or, hey, do they have a safe in their house? And I'll ask the spouses that of, okay, when I like to have an initial consultation, which I don't charge for. And if one of the things is cash, or I'll say, okay, like when things were going good in your marriage, how did y'all, when you went out, did your spouse pay cash for dinner? Or did they walk around with a bunch of cash? Or was everything on a credit card? So you get an idea of like what it was like before things may have started going south and then
before the planning started.
Yes.
Okay, let's talk about businesses. You said you do some business valuation for people. Yes. And most of my cases, a lot of them, somebody owns a business, and that's a big issue. Is sometimes they both have enough knowledge about the business to agree, but sometimes they don't, and we have to have it valued.
Correct.
And there's a lot of different factors that play into that. It's science, but it's also a little bit of art. Do you agree with that?
I would agree, yes.
So explain why that is. Why isn't it just pure add the numbers on a calculator?
Because of, I would say there's like 3 or 4 big assumptions, and I don't want to get too, dorky of business valuation. But the biggest one in Texas family law is personal goodwill. And trying to explain that to someone, which personal goodwill, for people that don't know what it is essentially the value attributable to the person. So for you, the value attributable that you're the attorney. You're, if I was going to buy, if it was just Melinda Eitzon's law firm, well, how valuable would that be if I bought it from you and you just went and started Melinda Eitzon 2,
across
next
the street.
door? Well, it wouldn't be that valuable. And how do you put a value on that personal goodwill? Unfortunately, there's not great ways. There's not like okay, let's fill out a form and all of a sudden it shoots out, this is the discount. So that's one of the biggest areas of argument in business valuation and family law. And then same thing there's a thing called a discount for lack of marketability, because selling a privately owned business is harder than just owning a stock of ExxonMobil that you can just go sell tomorrow.
Right.
So there's a thing like the IRS has some rules of like some discounts that are allowed. Discount for lack of marketability, discount for lack of control. Say you own 25% of a company with 3 other people, but you don't have any control of, okay, I want to sell the business. Well, the other 3 people have to agree. Right. Or I want a distribution. Oh, well, the other 3 people have to agree. So it's like, is that as valuable as just owning 100%? Most people say no. So those are some of the areas. And then, normalizing income statements, like a lot of people that own their own business pay for a lot of things out of their business. 1, to minimize taxes, and 2, just because it's easy, pay their spouse a salary or
Yeah.
pay their
Who maybe
kids.
does nothing.
Yes, yes.
I've
yeah.
seen that a few times.
Yeah, and then how to prove that they do nothing or, so that's why I would say, it's more of an art than a science. And I always tell people you could get 3 different valuation experts and they could come up with 3 different numbers. And that's just the way it is. It's more straightforward generally for, say, I used to do a lot of valuations for IRS purposes, for gift and estate tax.
Yes.
And those, you follow specific rules. Well, in the world of family law, people take some liberties, I'd say, that you probably wouldn't do for gift and estate tax, just because it's litigation.
Yes. And I think sometimes people misunderstand and they think, hey, if I get divorced, we have to sell the business. But in most cases, we don't, right? Somebody's trying to buy the other person out of it.
Yeah. So you're putting a value on the business and the other non-owner spouse is getting something in return. So the owner spouse generally wants that business to be as low as possible, so the offset is low, and then the one that's getting the offset, say a house equity or like 401k or brokerage, they want the business to be worth as high as possible, so they're getting more.
That's the push-pull we're
that
having.
that is so. And I mean, it's one of the most frustrating things I think of my job is doing those business valuations for litigation, because
It's really a range, probably.
it is, I would say.
Worth somewhere between here and here.
Yeah, and I always, it's funny that you say that, because I tell people all the time, a lot of times I'll get engaged to do joint valuation. So I'll get hired by the husband and the wife or both spouses, just to kind of keep costs down. And I've done a lot where I put a value out there and both of them, like, the non-owner spouse says, no, that's too low. And then this one says it's too high. And I say, well, if it's somewhere, if you're both are complaining, then it's probably pretty close to accurate.
It's a good sign.
Yeah.
One side's not going, yes.
Yeah.
My dad was a district judge in Dallas for 22 years. And he
Okay.
said he was on the family bench first. He said, if everybody's unhappy, my ruling was probably
Yeah.
correct. So it's very similar.
That's for the business valuation, I would say. And you get, if you're working on one side, you're getting one side of the story. And, for example, I worked on one where I valued the husband's business, and we get to mediation and we find out, because the wife knew, that the husband was creating fake invoices.
Oh, my word.
And he didn't tell me that throughout the whole thing. And I said, why wouldn't you tell me that? You just paid me to do a valuation. Now this valuation is completely irrelevant.
Oh, my God.
So it wasn't a good start to the mediation. And because then we were like, me and the attorney were like, well,
What do we
not
do
sure
now?
what we can believe anything that's coming out of this person's mouth.
Tell your own lawyer and your own expert the truth.
Especially when the other side, when
When they know. It's ridiculous.
Yeah. Yeah.
They were married to you. They probably know all your criminal activity.
Yeah.
Oh,
So,
my
I mean,
gosh.
and it's just kind of the nature of the business. You hope everyone is telling, like, for personal expenses. One of the most common questions is, do you run any personal expenses through your business? And a lot of times people just say no, and then you find out later, like, it's like a personal,
everything.
Yeah. It's basically like a personal checking account.
You meant my mortgage? That's not I didn't think of that as personal.
Yeah. Oh, my vacations, all these vacations.
Oh, that's what you meant. Yeah. So they need a little more definition.
Yeah.
For example.
Yeah.
Oh, my goodness. Okay. You talked about separate versus community, and that's some of the work you do.
Yes.
And for our audience, separate property means it's not going to be in the pot to be divided. It's only going to go to me if I can prove it, right?
Yes, that's my
But
understanding.
it's my burden of proof.
Correct.
That's where you come in.
Yes.
Is if somebody's trying to make their claim, hey, I had this money before marriage and I think it still exists, or I inherited this money and I think it still exists. Your job is to figure that out.
Yes.
But
yeah.
it's not an easy chore.
Not always. Not always. And the best example that I give to people that, when they find out what I do, some people think it's kind of interesting. I say it's the most interesting accounting work that you could find. I started out as an auditor, so it's the complete opposite.
Oh, yeah.
But if you own a house before marriage, that's easy to prove. You just show a deed. Well,
Yes.
then you get married, and then you want to upgrade, and then you sell the house that you had before marriage, and then say you put the money in a brokerage account or say a checking account, and then you're depositing paychecks in there and spending like regular expenses, and then a year and a half goes by, and then you put a down payment on a house during marriage. Well, the fact that the house was bought during marriage is presumed to be community property. But if we can trace those funds, like, okay, well, these separate funds were in the checking account, and then we do call it a line item tracing, put it in Excel, and characterize everything, you could allocate like, oh no, well, $150,000 of that down payment was from that original house. So therefore, you have a separate property claim in the new house. That's one of the most simple
And common.
explanations.
And
It's
common.
very common.
Very common. And there's rules about it, right? Like when a dollar goes out, if that was a community dollar or a separate property dollar. So you have to follow those rules and do
Yes,
that trace.
yes.
That's why we need an expert.
Correct.
The person, of course, the person whose life we're talking about, they'll just say, oh, I know all that money from this house is in that house.
Yes.
We're like, prove it.
Yeah. Yeah. A lot of
Enter
people
Brian.
say, yeah. A lot of people, I'm sure you hear it too. A lot of people say, oh, that's my account. That's my account. It has my name on it. I had it before marriage. And I'm like, okay, well, what happened in that account
Right.
during marriage? Oh, I was depositing paycheck. Because for people out there that don't know, anything earned during marriage, income is community property. So if you have, say, $50,000 in a checking account before marriage, and you're putting your paychecks and you're paying stuff out of there and things like all that stuff going on is community property. So just saying that, oh, my name's on the checking account and I had it before marriage and it's been 10 years, that's not going to fly in the courts or in mediation of proving within clear and convincing evidence that it's your separate property.
What's the biggest challenge in that work of what makes it difficult for somebody to make their proof?
Whether or not they have all the account statements, I would say, and the documentation.
Because the banks don't keep them for 20 years.
No.
So if you're not a little pack rat and you
Yeah.
have them in your attic, then you may not be able to make your proof, and that's just too bad.
Yeah, and that's a hard conversation to have. And like I said, I think I told you right before this, I've got a report that's due on Friday, and we're running into that issue of not having documentation all the way back. And what can you do? Like, I would say in a lot of those cases, especially if you can't even say, okay, how much was in an account ballpark wise at date of marriage? I mean, how are we going to convince a mediator or a judge like that somehow this money now is your separate property?
Yeah, maybe a small gap between could be explained or excused.
Yes.
Because there could be an assumption made, but if you can't even have a starting point.
Yes, that's what I say. And another thing I say when I explain to people, like clear and convincing evidence, that's the standard. Ideally, you have all the account statements. If you have all the account statements, we can trace really anything. You start missing 2 months, okay, that lowers it a little. You're missing 3 years. Yeah, the clear and convincing has become very small. People will ask you, they'll try to, ask you to kind of make some, and attorneys will, not you, but certain attorneys will be like, okay, well, can't you put together something? And say, well, maybe for like settlement purposes, but I'm not going to go in front of a judge and try to argue. Like, I don't know what happened in between these 3 years. Like
You would lose credibility.
I would lose credibility.
If you were trying to say, and I can still make this
Correct.
conclusion.
Correct.
Now, that brings us to the hired guns of the world.
Yes.
So sometimes people say, he or she hired a hired gun, and they're just going to go say anything. But in this area, they have to produce a report and what they relied upon, right?
They do.
Are you ever hired to look at someone else's work?
Yes, a lot.
So if they have the hired gun, we can hire you and say, hey, hired gun, prove it.
Yeah.
And then you can say, they can't make their proof, Judge.
Yeah, and then it's just really up to the judge because, the hired guns, I'd say hired guns are more prevalent in business valuation because of the assumptions that I was talking about.
There's a more area.
So there's a lot more of, hey, we've got a business, non-owner spouse gets a business valuation. It says it's $1 million, owner spouse, and then the owner spouse is like, whoa, this is not anywhere near $1 million. Like I make like 50 grand after everything. So then he or she, the owner spouse, would have to hire an expert to kind of rebut the other one. Tracing, there's not as much of it. There are some that will make some pretty aggressive assumptions and try to make some pretty outlandish claims, but they'll try to argue it as best they can and throw out their credentials and that they've testified 100 times and things like that. And you just never know. I tell people that you never know what's going to happen, especially if it goes to trial, what a judge will or won't do.
We both work in the collaborative world. Son.
Yes.
And in that, they're jointly hiring you typically, true?
Yes.
And that's nice because if you're jointly hiring someone, there's no pressure by either side for their expert to make a bigger leap than is really leapable.
Correct. Yeah, that's why I like the collaborative. I like the collaborative process because of that, where especially if the people really they don't necessarily have to be getting along, but are they going to try to keep the costs down and things like that?
Yes.
You can do things a lot more smooth and not have to. The dueling experts can get very expensive very quick, and it'll be expert provides a report. I'm hired to do a rebuttal report. Then I provide a report. They rebut my report, and then they update it. I mean, there's one I'm in right now. I've been like 7 or 8 reports. It's like
sounds expensive.
Yeah, just because it keeps on. It's like, okay, well, they updated theirs. We need to update ours.
Yes.
So
one thing I like in collaborative also is you can have conversations as you're going. You don't have to wait till you're completely done with your work and you've done your report to then find out what you just found out in that other case.
Yeah.
There are mystery made up statements.
Yes.
In collaborative, you can get into the work and then meet with the whole team and the clients and say, hey, this is what I'm seeing so far.
Yes.
Here's the assumptions I think I'm going to be making. And hear their rebuttal to that.
Yeah.
And here, wait, has he told you that he makes up these mystery statements?
Yeah. And it'll be, you can have the offline meetings with one of the spouses, and then that'll be communicated in a room with really everybody. So
Yes.
everybody here, both attorneys, usually a mental health professional, a financial neutral, and sometimes that's the role that I'm in, unless I'm a joint valuation expert. But going into that big meeting and saying like, hey, I asked about some of these things that look kind of unusual, and these were her responses, or this was his response. And then people could ask questions.
And then I think when you've been transparent about your process, it helps everyone accept the number.
Yes.
Because
Except-
they've they've bought into the process.
Yes. Or both not like it.
Either way. It could work out. So do you service the whole DFW area or what area?
Yes. And it's expanded recently. With me, I joined with Larry Settles, who he had some smaller town connection. So I've testified in Dallas County, Collin County, Tarrant, Rockwall. I testified in Palestine just the other day. I testified in Parker County. So really anywhere. I would prefer not to fly if I don't have
Yeah,
to.
I always say we service DFW in a 2-hour drive around it.
Yeah, yeah. And I've done some West Texas cases because they don't really have too many experts out there, financial experts.
Yeah. Some of the small towns, they need to bring in other professionals because they just don't have, for big cases, they don't have people who specialize so much. Or
Correct.
I've been hired in small towns because they think everybody's buddy,
Yes.
and they don't want to be worried about, hey, they're making a deal in the back. I don't think they're doing that, but that's what people worry about. So they
Yes.
bring in somebody from out of town to
I've heard that
help
also.
them with their case.
Yeah, yeah.
So it's kind of fun to go to some of those small courthouses. I've had good experience.
It is. I have too. And there's some of them are like the Parker County one. I mean, it was super nice.
Yeah, yeah.
The one in Palestine was like really nice. I mean, they're kind of like older, right
Yes,
in the middle of town.
historical.
Yeah,
It's a nice deal. Okay, so you're mainly hired by lawyers
correct.
to help their clients, but
Yeah.
could a client, if a client was interested, could they call you directly and say, hey, I need help, and then connect you with their lawyer?
Yes, yes. So I get both now. Either directly from the attorney or a client saying, I got your name from an attorney, or now it's gotten to be like, I got your name from a friend, or I got a call the other day from someone that got my name on a Facebook moms group. Because like I said, I generally want to help people through this process. So I tell people all the time, like, if you know someone that's going through a divorce and has no idea what they, like, where to start, if they call me, I don't charge, it's not like I charge, $300 an hour for an initial call or whatever.
Yes,
I will
yes.
talk to them to just give them some general advice of like, okay, yeah, this is my understanding of the process and my experience. And here are, do you want to do the collaborative? I mean, because a lot of them have never even heard of any of these things. They just think it's
Right.
like, oh, we're getting a divorce and everything's going to like just all of a sudden become a big drag out fight. And it's like,
Right. It
it
doesn't
doesn't
have
have
to
to
be
be that way. If you get the right attorneys and, you get good advice, you can kind of hopefully keep costs down, keep the if you have kids, try to keep the family together where, because this doesn't really benefit too many people to drag it all the way out and then go all the way to trial and, air a bunch of dirty laundry in trial.
Right. If they can settle either in the collaborative process or in mediation,
Correct.
that is usually better. My theory is the only people who go to final trial is because one of the two is crazy.
Correct.
And otherwise, rational people would not make that decision.
That's what I would think so as well.
Well, I can tell that you really care about people and you're in this business to help. That's such a good trait.
I do. I mean, like I said, I really I've helped friends, of just that they're going through it, and then I just give them my advice. And I don't want if people think it's like, I don't want people to break up.
Right.
That's not a thing.
We're not encouraging divorce.
But unfortunately, it happens.
It's a reality.
And it's like, okay, if you can get some good advice, because there are people out there that will give you, in my opinion, not good advice and are just trying to run up bills, then all of a sudden you'll get hit with a invoice for $40,000 and you're like, what just happened?
Why did I do that? Whose
Yeah.
idea was this?
Yeah. So yes, I genuinely want to help people as best I can, and then that's where, like, I try to do the best job that I can, and the most, like, where we were talking earlier about credibility. Like, to me, my credibility is the most valuable thing that I have. So
Reputation is everything.
yeah, so I'm not going to give that up for a billionaire client that wants me to just do, and I haven't had this happen, but some people will try to, hey, this is my separate property. This is, and it's like, well, you have no documentation proof. So,
Right. It's not, we don't create the facts. We can't control the facts. They are what they are. Well, thank you so much for being on this show, Brian. We're going to put your contact information on the screen, and I would highly recommend Brian. If you have any financial needs surrounding divorce, he really does it all. He can help. We didn't even touch on everything he does, but he can help. And as he said, you can talk to him for free and figure out if it is a match.
well, thank you.
You're so welcome. Thanks for being here. And that is it for the Melinda Eitzen Show today. Thank you for watching, and please tune in again soon.